let's get a little stock specific now and bring you all the top global stories from the US first. In US, automaker Ford Motors is projected up to $5.5 billion in losses on its EV and software operations this year, a loss similar to last year and a sign of the severe difficulties in cutting costs on battery-powered models. Now, the 2025 profit forecast too was lower versus the figure in 2024. Additionally, CEO Jim Farley said that if the Trump administration is going to implement tariffs affecting the automotive industry, it should take a comprehensive look at all countries. Farley singled out Toyota and Hyundai for importing thousands of vehicles annually from Japan and South Korea that have little to no duties versus the 25% tariff to be imposed in Canada and Mexico.
Alright, then moving on, Qualcomm reported better than expected fiscal first quarter results coupled with a strong guidance for the current period. The most important market for the company is mobile handsets. That's the one that grew 13% on an annual basis to $7.57 billion in sales. In fact, the company chief also sees big demand coming in from customers in China for expensive premium tier smartphones. Then, and additionally, they also expect handset revenues to grow 10% when it comes to this year.
Okay, moving on then. Interesting survey from JP Morgan Chase shows that traders across the globe now expect tariffs and inflation to have the biggest impact on global markets in 2025 as they brace for volatility. A little over half of the respondents named inflation and tariffs together as the top potential developments likely to dominate markets this year. However, on the flip side, fewer traders believe that a potential recession could move the markets this year, 7% compared to 18% in 2024. When asked about the biggest challenge in 2025, it was volatility, from the word go repeating the last year's concern as well. This year, 41% of respondents cited it as the top challenge, while 28% of the respondents mentioned it in the 2024 survey.
Alright, then let's get you some key commentary coming in. Chicago Federal Reserve President Austin Goolsbee warned that ignoring the potential inflationary impact of tariffs would be a mistake, citing the COVID-19 pandemic experience where supply chain disruptions drove up inflation. In fact, according to him, the US economy is strong, the labor market is plausibly at full employment, and inflation has come down and is approaching the Fed's 2% goal. So that's important commentary coming in from Austin Goolsbee there.
Well, alright, lots of important commentary trickling in from the Fed and lots to watch out for today on the ECB terms as well.